Thank you, Christian. And hello, everybody, and welcome to this IFRS 16 webinar, where we will share some practical experience learned from our lease accounting IFRS 16 implementation processes. My name is Lars Nordin, and I'm Services Manager at Tagetik Nordics. I have a long experience from the corporate performance management industry, both from software companies and from consultant companies, and I have been with Tagetik Nordics since 2013. And together with me today, I have
Lars Johansson. I'm a commercial manager at Inlumi. I have a background from controlling and finance in various industries in Norway. I have also worked as a consultant and system owner of different ERP and EPM solutions.
All right, thank you, Lars Roar. We will, during the upcoming 30 minutes, talk about how CCA Tagetik can help companies to insurance compliance with IFRS 16. We will talk briefly about the new regulation, but spend most of the time on sharing experiences from our projects and also conduct a demo at the end of the session, a demo of our solution. But first, I would like to introduce you to CCA Tagetik, which is part of Wolters Kluwer since last year, originally from Lucca in Italy. We have all the time been focused on solutions for corporate performance management, and we are proud of our customer satisfaction rating. We have about 1,000 customers around the world, and we have about 35 on our IFRS 16 solution. And we have more than 20 years experiences from this industry, and we provide a solution for all kinds of industries. And IFRS 16 is a good example of a cross-industry solution which we are able to provide to our clients. CCA Tagetik is able to provide a unified experience, a unified performance management platform, where we're able to provide support for processes like financial consolidation, budgeting and planning, reporting, analytics, and disclosure. And for the end users, we're able to provide one single interface, one environment, and one database for a multiple of different processes under the corporate performance management or CPM definition. What we often see is that the IFRS regulation creates an opportunity for system modernizations. Regulatory requirements need to be met, and legacy systems require updating to meet new requirements. And we can also see that budgeted allocating for these requirements also can fund a more generic system modernization. In this context, CCA Tagetik provides a single solution for both regulatory and CPM processes. Data collected can be shared across systems, and we have a non-disruptive solution for both cloud and on-premise. Finance maintains the ownership of data, and finance is also our speaking partner during our implementation projects. And finally, finance own and manage the solution after go live. We have also learned during the project that our prepackaged solution is able to provide an end-to-end solution for the IFRS 16 reporting cycle for our clients. We have some clients with about 150 contracts and others with about 15,000 contracts, and they can all collect and prepare the data, upload all the mandatory parameters from the contracts necessary for the IFRS 16 calculations, and we are also able to validate the data before uploading into our system. We are then able to run our calculation engines to do all the calculation, add the accounting rules, prepare the audit trails, and finally prepare the posting journals. Some of our clients take the posting journals to their ERP systems, and others prefer to take them to the financial consolidation systems. And then at the end, we also have all kinds of reporting and disclosure capabilities. So for example, we're able at the end of the process prepare the notes for the annual reports. Using our solution, you are able to use our pre-built features which we deliver in the system. We have a pre-configured workflow where we have pre-configured steps and tasks for the end users. So the end users can access the ETL processes, extract, transfer, loading the data into the system. They can also use the data entry forms and reports. We also have the pre-configured data model where you can, out of the box, find dimensions like contract elements, and options. And our clients then have to design and implement the entities and the entities hierarchies. And also, of course, the chart of accounts to the solution in order to customize for their own needs. At Tagetik, we also are able to deliver a modeling tool where you can create different scenarios and do different calculations using, for example, different interest rate for discounting purposes. And or using our calculation engines, you're able to do the calculation based on the parameters in the contracts to calculate the payments, to calculate the right of use assets and the corresponding lease liabilities, calculate the interest rate, depreciations, and other calculation which is done on basis of the information from the contracts. And then finally, we also are able to provide a data repository. Our solution is not primarily developed in order to be a fully fledged lease contract management system, but some of our customers use our system to prepare a lease contract repository with all the contracts, not only the contracts included in the IFRS 16 calculation.
Yeah, so before we jump into the topic of IFRS 16 and how we could solve challenges with IFRS 16 with Tagetik, I would just like to give you a brief introduction to Inlumi and who we are. Some of you might have heard about Sukaba. We have been working in the Nordics with enterprise performance management since 2004. But as of October last year, we merged with Infratex in Holland and we became Inlumi. So where are we and what do we do? On the next page. We are now present in 3 different continents, but with our main activities in countries like Sweden, Norway, Denmark, Holland, and the UK. So in total, we are now 160 consultants, and we work with helping our clients with financial planning, consolidation, and reporting. We are proud to be a partner of Tagetik in our vision to be the most trusted business partner in the area of EPM and analytics. We deliver all kinds of services in these areas, covering advisory, implementation services, and more technical configuration. So back to the IFRS 16 and leasing or not to lease, as a famous man once said. What we are focusing on in this context is the long-term leases, longer than 12 months, and the rights to use an asset. These assets could be buildings, vehicles, it could be planes and other assets that are leased instead of owned. In this context, we are not focusing on the short-term leases or service contracts that we might have, nor are we focusing on the leases of lower value assets such as personal computers. And then what are we measuring? We are measuring the value of the right of use of an asset, and we are measuring the liabilities of these leases. Companies need to depreciate the value of the right of use assets, and you need to accrete the liability based on the discount rate at the lease commencement. You should also reduce the liabilities by the payments made as you go along over the years. As a company, you should also separate the interest cost and the depreciation and book these individually into your books. What kind of impact will this have on your reporting? For the income statement first, the regulations will have effects on the interest expenses, on the lease liabilities, and of course on the depreciation of the assets. On the balance sheet, the calculated value of the right of use should be calculated, booked, and then depreciated. The cash flow will be affected through balance sheet movements, and of course, the liabilities to lessors will need to be booked as well. Lars Arvid also mentioned disclosure management and the need to explain movements on the balance sheet. And customers that we have talked to also want to be able to produce reports on the different lessors, lease types that they might have, and asset classes, as mentioned, vehicles and buildings. And with that, it's time for a demo of Tagetic Lease Accounting solution, and I'll leave that to you, Lars Arvid.
Thank you, Lars Roar. And now we have switched to the Tagetic homepage, which is totally configurable, and we leverage the concept of tiles. From here, you can access all your CPM processes which you have implemented in Tagetic. However, the topic for today is our lease accounting solution. So I launched the process workflow which we have designed in order to support the lease management solution. Our process for this reporting cycle is divided into 2 steps. First, we have the lease management step, where we collect the data, do the calculation, and analyze the result. And then we have a data release step, where we prepare the reporting part and also produce the posting files for further calculation in the closing process. First of all, we have 2 summary tabs. And as you can see on the right-hand side, we have a couple of entities included in the process. We have also a traffic light approach. Red means not started, yellow means work in progress, and finally, when you have submitted your data, the color turns into green. We also have a second summary tab with details, and I would only add to this summary that we are able to create hierarchies. So in addition to our submission functionality, you're also able to add an approval functionality. In this case, you can add an approval, for example, at the Europe and on Americas to approve the data submitted by the entities. So let's go to the lease management step. And our steps in Tagetic is also divided down into 2 different tasks. So in this step, we have a number of tasks which shall be conducted before we're able to do the submission at the end of the task. First of all, we have a reopening task where we can open and recall the data from the previous close and copy them into the current reporting period. In the second step, we have the update via massive import, which means that you can open an ETL process, extract, transfer, load, and load the data from an external sources, Excel files, data repository. In this context, we have also developed an input format file in Excel, which we offer our clients in order to prepare the data from the contracts, all the mandatory information, and some optional information in order to structure way load the contract data into Tagetic. When you've done this, you're able to check the imported data and then run the lease calculation engine in order to calculate all the data which needs to create the right to use assets and lease liability and corresponding calculations. And then finally, we have a reporting part where we can run the report and analyze the result, and also to see the report we can use for example, disclosure purposes. Let's open the lease management form, where we can, for this specific entity 1, look into the overall picture of the about 30 contract which has been loaded into the system. What you can see on this lease management report is all the contracts from a high level point of view for this specific reporting period. In the left-hand side, you have the unique contract code, you have the description, you can see the lease type, you can see the asset class, whether it's a land or building or vehicles in this example. You can also add other types of asset class, IT equipment, and so on. You can see the contract status, and you can see the maturity in terms of months until the contract expires, and then finally the value of the contract. We will now follow the base case for a couple of minutes in front of us. But before we do that, I would like to introduce you to the input format file, which I mentioned recently. In this input format file, we have identified all mandatory and some optional information which is necessary to extract from the contract in order to do these calculations. First, we have a field description, and then we have a tab for header where we all enter all the basic information for the contract, one row, one file for each contract. And then we have a tab for the elements where we load one or many contract elements included in the contracts. And then you can follow the instructions and load the data. So if you go to the field description, you can find all the specific fields and see whether they are mandatory and optional and other information as well. In the header file, we identify all the contracts, one contract by row, and you also have the instructions. So for example, you can, on your asset class, identify whether it's land and buildings, vehicle, machinery, and so on. And then finally, we have the element tab, where we're able to identify all the contract elements included in a contract. So you have at least one contract element per contract. In some cases, there are two or more contract elements which are linked to the specific contract. If you now go to a specific contract, we have this test case ending 010, where we have a quite simple contract for land and buildings over 4 years. We have a lease-free period in the beginning. And if I go to the general information tab, I can see all the information which was included in the contract header tab in the previous Excel sheet with the input format file. We identify the contract status, whether we are a lessor or leasee. We identify the start date, end date of the contract, the discounting rate, and also the asset class in this on this tab. Then we can move on to our rules and options. And in this case, we have a single payment rule where we identify the rent. The amount is 5,000 euro, and we pay it on a monthly basis. And we are also able to identify different payment rule start date and payment rule end date. In this case, we have a 6 months rent-free period in the beginning. So we start paying our rents from 1st of July. On these payment rules, we are also able to identify our renewal options, purchase options, and termination options. Based on this information, we are then able to continue with our scheduling. So we identify one record for each and every period during the duration of the payment, starting from July and going all the way down to December 2020. The amount is 5,000. We do not have any indexation clause in this contract on this payment element. So we have the same amount in both these two columns. And then we also have identified the discount rate used for the further calculations. In the following step, we do the present value calculation of all these payments. We can also identify the right to use assets as the total of all the discounted values. We also identify the interest rate, and based on this main information, we are able to prepare all the variations on our lease liability. From opening balances, from the initial balances, we have the lease liability creation. We have the variation during the period. In the beginning, only the interest rate, since we start the payment in July. We're also able to identify the short-term component and the long-term component, and then we have the final value for each and every period on the right-hand side. And in addition to this, we have a similar approach for the right to use assets. We have the right to use assets calculations in the beginning of the first period, and then a straightforward amortization over the entire contract from the beginning until the end. So all the information we have in these tables, we now use as a basis for our account rules. And when we go to our journal entries tab, we can see the posting journal which has been created based on this information. You can see the fiscal year month posting date in the beginning, but then you can see that we have added our accounting rules and we turn this calculation into debit credit bookings. So first we have the lease liability creation, a credit booking in the balance sheet, and the corresponding debit booking on our lease and billing creation, and then corresponding bookings for our interest expense, lease liability, depreciation for each and every period. And then when we come to July, we also add the accounting for the payments. So this is the way we are able to, based on the information in the contracts, in addition to our prepackaged solution, prepare the journals for each and every contract according to the IFRS regulation. Now, finally, I would like to show you an example of from our disclosure part of our solution. Here we have notes to the financial statement. So you can see that for our assets, land and buildings, vehicles, we have the totals for each asset. And then we also have used our variation accounts in order to specify by different variation types for each and every asset class. So if we go to the creation account, we can see that for land and buildings, we have 36,430,000. And if I then go to drill down, I'm able to run the drill down, and I can see all the transactions which has been calculated in the system down to the account level, account code, contract asset code. And then if you scroll to the right-hand side, we can see the amount and also the order trail, where we can see which part of the system created the record, who did it, and the timestamp with the date and time when the record was created. So that was a short introduction to our lease accounting solution. And now I hand it back to you, Lars Roar. Sorry.
Yeah, thank you, Lars Arvid, for your demo. I would just share some experiences and some challenges that we have been discussing with our customers. As Lars Arvid also mentioned, we have talked to clients that have somewhere between a few hundred contracts to 10 to 15,000 contracts. And gathering this kind of large amount of contracts in a structured manner can definitely prove to be a challenge. On top of this, add the need for revaluation of the individual contracts on a regular and running basis. You also need to calculate the effects of all these contracts per entity and for the total group. And you need to post adjustments for your statutory reporting back to ERP or back to a statutory consolidation tool. So what we see is that we believe the solution from Tagetik can help our clients to establish an efficient process for the lease accounting. And if we jump to the next page, we have looked into some impacts on a configuration project. And as I mentioned, the number of contracts will vary quite a lot between the clients, as will the diversity of contracts. Different lease providers might have different setup of their contracts, and gathering the correct information that is needed for calculation of effects according to IFRS regulations can be difficult. And the quality of input, quality of data of these lease contracts is also a different aspect. And then not least, the internal knowledge about IFRS 16 and requirements and how to handle quite a large amount of contracts is also very variable between different clients. So is it time to action? We believe it is. January 1st, 2019 is fast approaching. You should definitely start learning the basics. understand the definition of leases and the rights to control the use of the identified assets. You should start knowing your contracts. Who might know what contracts you have and where are they? Are they in different entities? Are they all centralized in one contract data management system? Or is it spread out between the entities? So definitely we recommend you to start prepare an internal project by involving people from accounting or operations or other stakeholders that might have an interest in the lease contracts and the calculation of the effects. So Lars Arvid, any last comments?
No, I can only agree what you have said, Lars Roar, that it's important for you to identify your contracts and also discuss with your advisory how to treat them in these IFRS 16 contracts, and together with that, start thinking on how to manage these calculations in the system solution.